Good day, everybody. Welcome to another edition of Check the Map with SRG Financial Advisors. I'm Tyler Bannister, joined by Kirsten Crum and Nick Wages. We are almost finished with the seventh month of the year. Only only 5 months left. It's coming fast and furious. Lots to cover today. A lot of information just in the last 14 days. I think newsworthy information, pertinent information. I just want to dive into what the markets have done. And we'll talk about sentiment here in a couple of minutes, but you can see across the board when you look at the most major stock indices, especially U.S. stock indices, from the S&P 500 to the Russell 3000 to the NASDAQ 100, most indices were up a little over 2% just in the last 2 weeks. U.S. aggregate bonds were up about 0.4%. Gold was down about a 0.5%. Dow Jones only up 1.2. The value side of the S&P was up 1.35% versus the growth side of the S&P up 2.85%. So typically you see the growth side outpacing value when there is some level of optimism. Um, and Even small cap US stocks, Russell 2000 being a benchmark for those, up about 1.17%. So we're seeing a lot of positive movement, continued positive movement, like we had the last couple Check the Map episodes. The tariff conversation, the fear of that seems to be subsiding, at least in the short term. So before we dive into the sentiment, I had a household ask me some questions just last week, actually, about cryptocurrency and the new Genius Act. So I wanted to take just a second and cover this because this was an act that was signed in mid-July, about 10 days ago, as of our recording. Let me pull up my screen. So the Genius Act was had nothing to do with our education system or improving classroom results and testing results from U.S. students in math or science, but it had everything to do with stable coins in the world of cryptocurrencies. So I won't spend a whole lot of time on this. Essentially, in summary, this is an article from the National Law Review. The Genius Act that President Trump signed on July 18th is essentially overlaying a whole host of federal regulations to oversee that industry or that segment of the economy. And you can think of it this way: it's not FDIC restrictions specifically, but a lot of banking restrictions were applied to the world of stable coins. Now, stable coins are cryptocurrency coins, but they are different from Bitcoin or Ether, some of those other coins, the Doge coins, things like that, that are more speculative, where the values fluctuate wildly. The stable coin, the intent of it, and there's multiple types of stable coins. The intent of it is one stable coin equals the value of one US dollar. And so the government, by implementing this Genius Act, is saying we want to make sure that one stable coin does in fact equal the value roughly of one US dollar. So a couple of years ago, some of these stable coins, there was a little bit of a panic. People were putting their money into these systems and using their money instead of cash or through traditional bank accounts and ACH transfers or wire transfers. They were using stable coins, this type of technology, to move their money electronically. But a couple of years ago, there was a period of time where the value of stable coins fluctuated and dropped. And so there was fear of, oh, I'm going to lose my money in something that these companies were telling me in the name is stable, right? So now going forward, any company that offers stable coins to be used as some kind of currency are going to have to maintain 100% reserve backing with liquid assets like US dollars or short-term US treasuries, which short-term US treasuries are effectively a cash equivalent, a cash alternative, right? They're not as interest rate sensitive. Not only do they have to maintain 100% reserve backing, they have to actually disclose the composition of the reserves on a monthly basis. So there are a lot of other regulations. Bank Secrecy Act is going to be applied to stable coins, so that requires these companies to know their customers. A lot of the the things that we saw, especially post 9/11, to try to stop anti-money laundering or stop money laundering with anti-money laundering practices, et cetera. So they want to bring stability to the stablecoin side of the crypto world. It's kind of interesting though. Think about, do you remember Silicon Valley Bank?
Yeah.
Like it was a year and a half ago, and they went under. Do you remember why they went under primarily?
Because they had a
Was it?
run on their assets and they had all their money tied up in 30-year bonds.
Yeah.
Exactly. So that's perfect, right? So yeah, their depositors said we want our money all at once, and their reserve backing. This was an FDIC insured banking institution. Their reserve backing was primarily 30-year treasuries, which were interest rate sensitive. So with this Genius Act on stablecoins, they said nope, you can't even do that. Your backing has to be 100% U.S. dollars or 1 to 3 month U.S. treasuries. Um, so it'll be interesting, but we'll probably continue to see developments in the cryptocurrency world. This is a pretty good article summarizing the intent of the Genius Act. But back to markets, though, like I said, we've seen some steady positive movement the the last 4 to 6 weeks, right?
Mhm.
And there's probably multiple reasons for that. But Kirsten, I think you had an interesting sentiment survey.
Yeah. So especially since April, we've seen a good push up in the market lately, and a lot of it, or not all of it, but interesting stats is that retail traders or the individual investor now makes up about 20 to 21% of total market volume, which obviously since over the past decade, that has grown a whole lot, where before this number used to be about below 10%. Um, so retail investors were actually the largest net buyers of US equities into Q2 and Q3. They just published that as well. So kind of interesting. So I'm going to share my screen for an individual investor sentiment survey. If we can see this. So we've looked at ones where they look at, what institutions are buying and how exposed they are to the market. And this one is specifically individual investors. This is just simply a survey that goes out to them asking, where do we feel the stock market will be in the next 6 months? So kind of wanted to take a look at the past couple weeks that they have looked at this survey, being the 1 year bullish high was ending in end of last year, being at 51%. So we're still very bullish. The individual investors being extremely bullish. The only kind of change in the past week has been in this undecided range, which is actually kind of creeping up to the 1 year neutral high, which is when we typically see either a large shift back into their opinion of being bullish or going into bearish, just obviously depending on where they're expecting the market to go in the coming 6 months. A few other interesting points is how much of a boom that the retail investors or the individual investor has had, especially just looking after this is obviously COVID time 2020, and this just seems to keep growing. So this hasn't updated for the past year and a half, but just that huge boom that has happened, which a lot of the market in the past few weeks since April has been fueled with individual investors putting more money into the market. I read I listened to a podcast that was kind of interesting saying that, a possibility for this could be that a lot of younger couples are realizing they're maybe not going to be able to buy a house eventually. So, maybe we're saving up for a home. Maybe we're accepting that we're never going to get to that with the way that home prices are. And I know Nick's going to touch on that in a moment, but it's led to also just the total opposite of what buying a home is, and that is investing in 0-day options volume, which has hit a high here in Q3 of 2025. So this is, I have to touch on this because some of my background comes in options trading, but just, we saw such a surge in 2020. It seems to just start surging again. And again, I don't know if that's fueled straight by we have some of these assets. We're realizing maybe we're not buying a home. We don't have enough to get to that point. So, what's the difference of not having this stockpile versus throwing into something extremely risky? It's great to see individuals getting into investing, but also how important it is to make sure you're understanding the risk of anything that you're getting into. 0-day options might not be the thing that is to your risk appetite. And a lot of people probably don't know that. Especially with social media, it's so easy to see something being done and then realizing after the fact they maybe put themselves in a position that they don't want to be in. So that kind of
Gosh.
ties back into possibly the housing data. I just thought that was an interesting point on how all of
Well,
it tied
there's so
in.
much. I think we could talk for 3 hours about the two, like, couple
Yeah.
points you just made.
Yeah.
Yep.
Like, one, look at the percentage of the SPX of the S&P 500
Mhm.
from 2011 to
Right.
2025 as far as options trading.
Right. Yeah. Crazy.
It's wild. I would love to see a couple of these last two charts you showed. I would love to see that data broken down by age ranges, like bands of ages, and like
Yeah. Right.
what generation is doing what and who's taking what risk. I think that would be
Mhm.
super insightful. And then to your point, as far as individual investors, retail investors driving being 20% of the market, 100 years ago,
Oh, it was
was it
none.
what was it?
You know.
Yeah, was it point 001% of the market, right?
Yeah.
The lack of access to these equity markets just 100 years ago is staggering to think about. So right now, if you think about that, we've had it's almost two sides of a coin. Now everybody has pretty easy access to invest, right?
Yeah.
Even compared to when I was in high school and college, it's so much easier to invest
Mhm.
these days.
Yeah.
For young people, the avenues where they can buy, fractional shares or just do these things. The brokerage account setup is being so much different. But then you couple that with are these younger investors as educated as they need to be to navigate the world of investing
Mhm.
and to do it well? Or is there going to be a shock to the system when options trading doesn't work, or we had a bear market earlier this year, but when there's a more sustained bear market and
Mhm.
just because if this is the alternative, and then we'll dive into the housing, if this is the alternative to buying a house, which I think there's probably a portion of this that's certainly that, um, if a household thinks that they're investing and they're going to make this money short term, and turns out they lose the money and they still can't buy a house.
Right.
um,
Now where are
that's
we?
that's very discouraging, right? Yeah, so participation in markets and things like that. So I think there's a huge opportunity. My big takeaway is, um, whether, if you're listening at home and you're thinking I've got kids or grandkids, or even for us, the younger people in our lives, can we help them be equipped to take advantage of unprecedented access to equity markets, right? So it could be a huge blessing if it's done right and well. So if you're sitting at home and you have younger people, and I mean, all of us are guilty of not wanting to listen to our parents or grandparents at some point.
Mhm.
If there's someone in your life that wants to have a 15-minute, 30-minute video call with us and chat through opportunities and potential pitfalls to avoid, please do reach out. We'd be happy to schedule that time and answer any questions they have for sure.
Yeah, it's actually really interesting being relatively connected with the, people in the stage of life getting out of college within the last few years, having
Mhm.
coached wrestling at Lee Summit North, having several wrestlers that I stay in contact with. And I field a lot of questions from them on what should I invest in? Like a lot of times that's in the context of saving money to buy for a house. And I've also talked to multiple at length about their dabbling in options trading too. So it is, you mentioned wanting to see like the generational statistics on, where that influx of money is coming from, both in options trading and not. I would venture to guess that it's probably younger generations that are um, experimenting more with that than maybe in the past.
Yeah.
But like Tyler said, though, it's really important to have um, like a plan, right? We talk about the importance of a plan all the time in our process, but knowing how long it's going to be before you buy a house, like, yeah, of course, there's, a desire for enhanced growth potential in a short amount of time to try to maybe accelerate how long it takes you to save up to buy a house in today's market. if that is the driver behind a lot of this. But like you mentioned though, there's the investment time horizons, the longer they are, the more likely they are to work out in your favor. And it may not necessarily be the smartest maneuver to try to invest money, especially in something like options in a really short term time window to try to, enhance your growth potential for a house purchase within the next year or two.
It's also like it seems to be like one extreme or the other. It's like someone who, like someone in my age of like, okay, no, I've never even touched investing before. And then someone who wants to, and then this is what they're doing instead. 0-day expiration options. Like it's just like there's no in between, it seems to be. And it's
Yeah,
obviously, I mean, look at this doesn't even, there's not even monthlies in this Q3. Like it drives must be that much. It
well, the
is.
other thing too is it's a culture of, the fantasy football from 20 years ago has quickly turned into online sports betting,
I
Mhm.
right?
almost mentioned
And,
sports gambling as well.
yeah, so sports gambling and effectively options trading is a form of gambling, right? It's
Yeah.
not that's probably the best way for someone to understand it because it's truly not investing where hey I want to put my assets to work in this company for some sort of growth or product to be made or service to be provided. You're placing a bet with options trading, but culturally that's normal, right? All these online casino games and sports betting just is so rampant, and
And
it's
addictive.
not. Yeah, I mean, even when I was growing up, it's like, okay, if someone gambled a lot, they went to the casino, right? Or they're at a golf course. I grew up playing golf, but I visually saw the negative impacts of bad gambling habits. And like,
Mhm.
oh my goodness, like they're still trying to win big, but they have nothing left. And so with the online gambling, it's just all through the phone. And it's not as easy to see the largely detrimental impacts of that. So when you go, I'm going to invest now, also on my phone with a different app. Oh, with options, I can make this much more. Well, you could lose a lot more too, right? So I think it comes back to that education, understanding what you're doing. Um, the ease of access without knowledge can be a hazardous place to go.
Yeah, absolutely. So,
Yeah, there's been reports that have already surfaced in the online sports gambling world that have um, referenced bankruptcy rates up 25 to 30%, with that being the key driver, like in certain demographics. So it is troubling to see how hopefully that's not the avenue that many are looking for to try to enhance what their money's doing for
Well,
them in a short period of
I'll,
time.
I'll say this, like as having kids who are teenagers, right? So for me, growing up, if a kid said the word parlay, like we were probably pretending to be pirates or it was a pirate movie or something, right?
Hmm.
And to this day, I could not explain to you what a parlay is in sports betting. But do I hear teenage kids use that word in the context of sports betting or even just talking about the stats from the NBA games from a day or two ago, whenever it was, that word is fully included in day-to-day vocabulary with your average teenager right now because of sports betting. So
Yeah.
it's an interesting world.
Another rabbit
So is
trail we could spend multiple hours going down.
right. So, but the housing market's also interesting. So let's dive into
Yeah.
the most recent data from that.
Yeah. So I mean, obviously we talk, our natural assumption being that we follow the housing data really closely, is to assume that people that are investing in that way or are taking those kind of risks and gambles, so to speak, are doing so because of the affordability of life, um, in general, much less buying a house. There were really, really interesting data reports that come out, and until you look, deep down into the drivers behind a lot of these things, some were really encouraging and some were super discouraging. Um, so just to get into a few, housing starts for June were up 4.6% for the month. That sounds great. Um, the reason for that increase was entirely due to multifamily category, which is extremely volatile, it's been up and down 30% in some months. It was up 30% in June, month over month to May. So starts for multifamily houses jumped 30% in May. Single families actually dropped 4.6%. So if you follow the narrative of a lot of our conversations on the housing market and you hear, oh no, single family homes starts dropped 4.6%, that's obviously the wrong direction. We really need a massive increase, especially like to affordable housing categories for people maybe looking to buy their first home. Single family starts are actually down 10% in the last year, and permits for those builds are down 8.4% in June as well. And even more on the dark cloud side of things. Previously, when we saw drops like that, it was because there was a surge in completion. So builders were finishing out projects before they got started with new ones. Well, completions actually plunged 14.7% to their slowest pace in 3 years. So the momentum behind housing starts is not necessarily going to flip immediately towards a large increase in single family home starts. I mean, if you just look at permits and completion rates, from permits all the way to completion rates, it's not overly optimistic. Now, if you look at the cost, this was probably the most interesting data set from like the last week, was that the median price for new homes was actually down 12.7% from its peak in October of 2022. So we talk about the Case-Shiller Home Price Index and how houses continue to become more and more and more unaffordable. Well, the median price for new homes is down. A lot of that is due to some of that is due to smaller square footage builds. Square footage, the average square foot for a home is down 5.6% in the last year for new single family homes. So some of the price drop is due to slightly smaller homes being built. We need a lot more than 5.6%. Like the median home price for a new home is $401,800 in June, and the average price is over $500,000. So either way you look at it, it's still, think about getting out of college, maybe having some student loan debt, getting salary job with benefits, maybe trying to start a family, and then how am I going to save for, anywhere from $20,000 to $80,000 down payment on a $400,000 house.
I mean, the average prices now most of them would have been jumbo loans just 5 years ago, 6 years ago.
Yep.
So.
Yeah. Even in that context, back in 2016, the conforming loan limit for a jumbo loan to avoid it being a jumbo loan in a non-high cost county across the U.S. was $417,000. That's almost what every house sells for. The median home sells nearly for that.
Right.
So it's obviously pretty staggering. The supply, although we talk about the starts and completions being down, the supply for single family homes is up 280% from where it bottomed out at in October of 2022. Granted, we started from the trough, so it's not like we have this abundance oversupply, but the supply increase over that 3-year period has actually helped prices slightly, where you can say the complete opposite for existing homes. All the headwinds in the existing home market with people having the locked-in rate phenomenon of doing their last loan at 3% rate and buying their house at a much, much lower price. So if they want to realize the appreciation in their home since they bought it, well, they have to probably deal with that same appreciation and inflation when they go buy the next house. And then they're also trading a 3% rate for a 7% rate. So there's a lot less incentive to sell an existing home, a lot shorter supply in the existing home market. In fact, in June, like summer buying season, home buying season, existing home sales were down 2.7% in June. So they continue to just way lag averages that we've seen even in recent decades. And The affordability issue on the housing side of things doesn't seem to be resolving itself anytime soon, but it is interesting to see that slightly smaller houses are being built. The average square footage of a house is down, and that, in combination with hopefully an increased supply eventually, could lend itself to seeing at least some relief. Now, whether or not we get any relief on the interest rate front is a completely different, side of that conversation. We haven't even talked about the inflation data from, a couple weeks ago. So for June, we had a 0.3% increase month over month. So we're starting to creep back into that, ugly territory of high twos. 2.7% is like the year over year annualized average. So 0.3%, if you take that out over 12 months, that's 3.6% inflation, obviously going completely in the wrong direction. But what I found interesting, and yeah, thanks for pulling that up. What I found really interesting there's obviously the key drivers that we've seen, shelter, food. Those are some of the big ones. Has anybody tried to buy beef lately? So interesting.
It's
stats.
pleasant.
Yeah.
It's the 80-20 ground beef pound is at numbers I couldn't have fathomed at one point in my life.
Right.
Yeah.
Yeah. 80-20 that most people would consider good for like making burgers or, like it's not a prime cut of beef.
Yeah.
Being
ground beef,
basically
yeah.
what it cost not that long ago to buy like a strip steak.
Right.
Um,
Yeah, it's a shift.
yeah. So we've seen obviously motor vehicle insurance is one of the cake takers for, non-food related inflation, up 6.1% year over
Yeah.
year. But if you actually scroll down to the next page, see the really interesting data here on meats, beef and veal overall 10.6% inflation rate, uncooked beef steaks 12.4% year over year. You can see on the far right too, huge jumps in that category here over the last.
I mean, uncooked ground beef up double digits,
Yeah.
So
Yeah, so with all the headlines and conversation around tariffs and how they're going to impact inflation, and granted, yes, there's international trade when it comes to meat and food. I get that. These are not necessarily things that are affected by tariffs or international trade policy. A lot of this is stuff that we're dealing with domestically, independent of other nations.
yeah, and even regionally, right? So right now with screwworms and the Mexican beef supply, right? I mean, you look at Canada, US, and Mexico
Mhm.
from an economic unit, we could do really, really well together as a continent, right? There's a lot of opportunity there. And so what typically would be a lot of beef supply from our south right now is being hindered. So that's part of it, but still,
Yeah.
This is not even a new trend. This is
Yeah.
this is
look at eggs.
this is 10% year over year on top of what it's been for the
Exactly.
past 4 years too, right?
And eggs getting 7% relief last month, still up 27% year over year. What's interesting is wild caught Alaskan salmon here locally in the Kansas City market is cheaper than grain-fed beef.
I eat more salmon than beef, so this is a good day to be me.
Fish has been friendly, 0.9% year over year. That's fish has seen the better side of the inflation coin compared to other meats. But I bring this up to say, how many American households eat red meat and eggs? Like how many people are affected by this and looking for alternatives? Like pork is obviously been substantially cheaper than beef recently. Fish, looking for alternatives maybe, or dealing with the higher prices on the things that, like, these are things that most American households consume on a regular basis. So it's just goes back to the inflation is real at the household level, far beyond what a headline number says for whether or not it's moving in the right direction, right? If you look at stuff that is clearly impactful on a regular basis, everybody needs car insurance, and most people eat meat of some variety on this report. And there's a lot to be said about what the Fed does with interest rates going forward. And so we bring up this inflation report because it has a heavy impact on, what they choose to do with interest rates. The reality is there's still a lot of wait and see on how these numbers are going to impact people over time, and whether or not a rate cut is necessary in the near future to help provide relief to some of these higher prices.
Yeah. Yeah, it's certainly parts of this segments of this report affect the average household much more than others. So
Right.
the top line number isn't always the most informative as far as the consumer sentiment goes. So
Mhm.
lots of fun stuff. And you know, like you said, the annualized inflation rates they crept back up a little bit, but we shall see going into the fall, and then we'll see with utility rates going into the winter and the colder parts of the country how that plays out, and it'll be interesting. The impacts on the typical retail sale boom and towards Christmas time. How will
Mhm.
consumer debt, how will inflation all impact that? Higher utilities potentially. A lot of municipalities' property taxes become due towards the end of the year. And I don't know if I've seen a county in Missouri that hasn't raised property taxes, and I'm sure other states are in the same fashion raising taxes as well. So it'll be an
Yeah.
interesting last 5 months of the year as far as this goes.
And it's really interesting too to see, like, because there's two sides of all of these arguments around inflation and short-term interest rates. Like, the federal funds rate right now is around 4.25%, and even after some not so favorable months on the inflation report, year over year inflation is 2.7%. Like, the Federal Reserve is crushing inflation on those short-term borrowing rates. So another side of that argument is, why don't we bring it down closer to what actual inflation is? In fact, there are economists who say it could be 1% lower. So it'll be interesting to see what stance they take. It sounds like September is really going to be the tipping point for whether or not we start to see any kind of substantive rate cuts this year.
Since we didn't get the 8 we were supposed to get last year or whatever.
Yeah. Yeah. And I'm almost certain that our final resolutions with some of the nations that are still outstanding with the trade agreements will have a pretty significant impact on those conversations at the Fed too.
Right. And since those are still in limbo, uh, you can't really blame the Fed for saying, let's let some of these things
Yeah.
settle so we can see the real impact of those pieces before we make a policy decision that's going to affect pretty much every part of the economy in some way, shape, or form.
Right.
So,
Yeah.
Kirsten, do you have
Got a monthly calendar.
all right, what's on the docket for the next couple of weeks at least?
Let's take a look. Oh,
It's about to be back to school time
yeah, that's right.
for much of the
All
country.
right. Can we see this?
Yes, perfect.
All right. Moving into August. I can't believe we're even saying August. I feel like it was just start of the year. So going into later this week, and I probably should have had a few days worth, but starting this Friday, we're going to get an employment report coming in, seeing where that's coming from, how we're doing on the employment side, especially as it relates to interest rates and the dual mandate, where we are with employment numbers. And then relatively a pretty calm week here, the second week of August. We'll continue to watch what the CPI is that following Tuesday. seeing where the new inflation numbers come out. PPI, the producers index, as well as the retail sales, and we'll be talking back with you guys this week. So not the biggest news week unless I'm missing something in these next 3 days.
Well, the only things that are not on there are not they're the things that aren't regularly scheduled programming, like trade
Gotcha.
talks with China and
Right.
some of those other where it's not we have this historical pattern of reporting. So
Yeah.
there will be plenty of economic information flooding through, just not in the traditional channels per se. So. Well, as always, if you guys have questions or topics that you really want us to cover or dive into, we are more than happy to do that. As well as if you have people who are important to you in your life that have questions, how do we sort through all the noise, all the headlines? How do we actually come up with a solid financial plan and get where we want to be, whether they're in their 20s, just starting out in their adult life, or are in their 60s, 70s, and are looking to have that sustainable work optional enjoyment of life at that stage. Happy to help with both ends of that. You can reach out to us at 573-302-7212 or at srgfinancialadvisors.com. We appreciate your time and we'll talk to you soon.